Traders War Room proudly presents the daily video with the best trading and investing alerts anywhere on any platform. With up-to-date stock, chart, and market news, TWR is simply your one-stop shop. Saturday Tech Video. What is up, team? Chuck with Traders War Room, and I'm back at you with another video. Guys, this is your tech video, and I got a fantastic one for you. But real quick, I need you to hit that like, that share, and that subscribe button. And I need you guys to come along with me on the journey and check the description tab out. I got tons of tools and tidbits right there at your fingertips. Hyperlinks, click them, check what Traders War Room has to offer you guys, and go out there and hopefully make some money. Now, today's tech video, we're going to talk about money markets, all right? Big buzzword. A lot of the wealthy are starting to move their money into these money market funds, and I want you guys to understand what these are, what they mean, and how they work. Basically, even though normal retailers like ourselves, we don't really have to worry about the financial burden with bank collapses and stuff like that, but we should always be setting ourselves up for success. And a wise person once told me that if you want to be successful, you find out what the successful people are doing and you follow in their footsteps. So without further ado, let's go ahead and get into the video. And as always, if you're ready, follow me and let's go to war together, team. Traders War Room, baby. Let's get it right now. Activate your 2-day trial of TWR All Access on the Discord platform. We cover it all at Traders War Room, whether you're looking for stocks, options, futures, Forex, crypto, or even sports betting, or you want real-time alerts, live trading, algo signals, or even if you just want to be part of a community of like-minded investors to grow, learn, and share together as a team. Something for everyone at Traders War Room. Activate your 2-day trial today and go to war with TWR. So today, we're going to talk about money market accounts, how it works, and how it differs from other banking type of accounts. So what is a money market account, or MMA? And we understand that this term, the money market account, refers to an interest-bearing account at a bank or a credit union, sometimes referred to as a money market deposit account. Money market accounts have some features that are not found in any other type of accounts. Most money market accounts pay a higher interest rate than regular passbook savings account and often include check writing and debit card privileges. They may also come with restrictions that make them less flexible than a regular checking account. They are important for calculating the tangible net worth. Money market accounts are financial products that are offered to customers at traditional and online bankings and at credit unions. They give account holders some of the key benefits of the savings account while providing them with features of a checking account like we're normally used to with regular banking. Some of these features are like savings accounts. The MMAs allow account owners to earn interest on their balances. The interest rate offered is normally higher than a traditional savings account, and the interest rate, though, tends to be variable, which means it fluctuates as the market conditions rise and fall. You get some debit cards, and some banks include debit cards with accounts, which allow owners to utilize automated teller machines or those ATMs to make deposit withdrawals and transfers and check writing. Along with debit cards, clients may also be able to write checks against their account balance. Do people still actually write checks? Absolutely, but they do not utilize them like they did back in the day. A lot of times, this is completely online or digital in the current landscape of which we live in. Banks often require a minimum initial deposit in order to open MMAs, and balances must be maintained over a certain threshold while they are active. Banks may impose a service charge if the balance falls below the minimum amount. This is where many banks change requirements so that they can be competitive. Money market accounts are suited for individuals who want to earn more interest than they would with a savings account with short-term goals in mind. As such, an MMA may be a good idea if you're saving up for a specific purchase, such as a vacation, a down payment on a car, or for a rainy day or emergency fund. They are not intended for long-term purposes for retirement, which is why you've seen an increase in MMAs lately with all the financial banking issues. The wealthy essentially are looking for a place to hide their wealth while we go through this financial instability like we have. Let's go a little bit into the history of MMAs, right? So until the 1980s, the federal government placed a cap or limit on the amount of interest that banks and credit unions could offer customers on their savings account. So many institutions gave out small appliances such as toasters, waffle irons, and other incentives to attract deposits because they couldn't compete with the money market mutual funds when it came to the interest rates that people were getting back. What you have to remember is these incentive gifts that banks were trying to offer at the time, these were not common, everyday, all household type of items like we see today. So then introduced into the 1970s, the money market mutual funds are sold by brokers and mutual fund companies. Under the pressure of the banking industry, Congress passed the Garnett-Garmin Depository Institution Act of 1982. This new law allowed banks and credit unions to offer money market accounts that paid a money market rate, which was higher than the previous capped rate. So, of course, there's pros and cons of the MMAs, and there are advantages and disadvantages to anything that you have dealing with money market accounts and in financial institution, especially when you compare them to the other type of accounts. Advantages include higher interest rates, check writing, debit card privileges. Banks and credit unions generally require customers to deposit a certain amount of money to open an account and keep their account balance above a certain level. Many impose monthly fees if the balance falls below the minimum. So accounts held at banks are covered by the FDIC, and while the other ones held at credit unions are covered by the NCUA. Regardless whether it's the FDIC or NCUA, they cover certain types of accounts, including MMAs, up to $250,000 per depositor. Now, multiple insurance are on accounts at the same banking, whether it's checking, savings, or whatever, count towards that $250,000 limit. So if you want a higher insurance level, you can get a joint account, which then it's insured up to $500,000. Now, potential disadvantages include limited transaction fees, minimum balance requirements. And so when we go back, the pros, you get higher interest rates, check writing privileges, debit cards, insurance protection. But the cons are limited transaction, some fees, and that minimum balance requirement. So a lot of people that put their money in here, again, it's a short term. They're not intending to utilize it, because if they utilize it, they'll get penalized for coming below that minimum balance requirement, or they have a limited amount of transactions that they're able to be used. Again, these are individual banking requirements and are utilized to be competitive, so they can change from institution to institution. Now, let's compare the MMA to a savings account. One of the attractions of many market accounts is that they offer higher interest rate than the savings accounts. For example, the average interest rate for an MMA in 2022 was 0.08, while the average savings account paid out 0.07. When overall interest rates are higher, as they were during the 80s, the 90s, and much of 2000s, and like we're seeing today, the gap between the two types of accounts will be wider. Hence, why the interest is right now in these money market accounts compared to regular savings accounts or other accounts. Money market accounts can offer higher interest rates because they're permitted to invest in CDs, government securities, commercial paper, which savings accounts cannot do. The interest rates on money market accounts are variable, so they can rise and fall with inflation. Hint, keyword right now, rise and fall with inflation, right? How the interest is compounded yearly, annually, and daily can have a substantial impact on the depositor's return, especially if they maintain high balances in their account. Keywords, inflation and compounding, definitely are dependent upon what you can get out of these money market accounts. Unlike savings accounts, many money market accounts offer some check writing privileges and also provide debit cards with the account, which, like a regular checking account, can help establish people so that they continue business as normal, just with restrictions. Many money market and checking accounts share some basic characteristics as well, the same way they do with savings account. Account holders can make unlimited deposits. Some of them even offer debit cards, which allow account owners to make point of sale transactions, and they can also write checks against the MMA as well. Now, this was important as far as what we're talking about here with the MMAs. In April 2020, the Federal Reserve lifted restrictions set for accounts like MMAs under Regulation D. prior to this, depositors were limited to a total of 6 transfers and electronic payments per month. The type of transfers affected were pre-authorized transfers, including overdraft protection, telephone transfers, electronic transfers, checks and debits and card payments to third parties, ACH transactions, and wire transfers. Depositors who exceeded the limits were fined. Although the rules were amended under federal regulations, some banks may still impose limitations and restrictions on how their MMAs may be used. As such, it's important to check with your financial institution about these rules. Again, that's that banking competition so that they can drive and draw in new depositors. Now, I just wanted to blow this up so you could see with that image as far as some of the highlights on Regulation D. There's a ban on general advertising and socialization, must have pre-existing relationship with investor, unlimited accredited investors up to 35 sophisticated investors, verification reliance on investor statements, no dollar limit on raises, and the SEC Form D filings state blue skies filing. And then on the other side of it, the 506C, general public advertising and soliciting allowed it, accredited investors only, verification fund must take extra steps to verify, no dollar limit on raise, and the SEC filing D, filing state blue skies funding. So let's talk about the MMAs versus mutual funds. Unlike various bank and credit union accounts described above, money market mutual funds offered by brokerage firms and mutual fund companies are not FDIC or NCUA insured. Banks may also offer mutual funds, but they aren't insured either. However, because they invest in safe, short-term vehicles such as CDs and other securities, commercial paper, they're not considered to be high risk, but rather low risk. The key here is that mutual funds are not FDIC or NCUA insured. Both money market accounts and money market mutual funds offer quick access to the depositor's cash. The companies that offer them, however, can place limits on how often depositors can make withdrawals or redeem shares. Others may require that checks they write be over a certain amount. The returns on money market mutual funds tend to be higher than those on money market accounts. When you compare some of the common features found in money market accounts and other types of deposit accounts with the interest rates and provisions, one financial institution to another, it's worth shopping around. All banks are not created equally, so definitely shop around and get the best rates. So banks and credit unions offer many types of accounts, some with features that can make them competitive with or superior to money market accounts. So we're going to look at alternatives, cash alternatives, where you can put your money. The passbook savings account, the typical savings account, right? So unlike money market accounts, these regular savings accounts typically have initial deposits or minimum balance requirements. They also pay interest, although usually not as much as money market accounts. In fact, savings accounts have been notorious for paying absolutely slim to nothing for savings accounts. And like all the other type of accounts, they're FDIC and NCUA insured, so they're really safe as long as you stay under that threshold of $250,000 for a single one or $500,000 for a joint. And you need to check with your banks to see if there are any restrictions or withdrawals. Now, the high yield savings account, they are held at banks and credit unions, and they are depending on the institution. The interest rate may be better than on the money market account, depending on these particular savings accounts. High yield savings accounts are also FDIC and NCUA insured, and the potential downside that's with these is that they might have more rules and stipulations that are requirements of deposits when you put the money in and take the money out. So that's the kind of the game you play with these high interest savings accounts. And you can see up there in the image how a high interest savings accounts versus a traditional savings account compound your money over the time. So regular checking accounts have big advantages over their money market cousins. Unlimited transactions, including checks, ATM withdrawals, wire transfers, and so forth. They are also FDIC and NCUA insured, and their main advantage is that they pay a very low, often zero interest rate. That's a disadvantage. They're paying a very low, often zero interest rate because you're allowed to utilize them as you see fit. Now, high interest yielding checking accounts, like their high yield and savings account, these accounts offer interest rates that rival and sometimes exceed those of money market accounts. They also share the high yield savings account principal weakness, which is they may have more complicated requirements, such as a minimum number of debit transactions each month. So, a lot of these high yielding checking accounts, you have to put a certain amount in every single month, and you get penalized if you don't meet that obligation. Now, sometimes these banks, they actually take some of that risk on because they're expecting to get some of these penalties. And this is how some of the banks make money. And it should anger you because they're actually taking on this particular risk in the idea that they will get some of these percentages back because people won't meet their regulate requirements or meet the obligations. So they're able to tax them and make some money off of that. They also impose a cap, for example, $5,000, above which the high interest rate does not apply. In other respects, high yielding checking is like regular checking with unlimited checks, a debit card, ATM access, and FDIC or NCUA insurance. Rewards checking is becoming a lot more popular. This is the type of checking account that offers sign-up bonuses and other rewards, such as high-yield ATM fee reimbursements, airline miles, and cashbacks. The main downside to similar to high-yield checking, notably higher fees unless the depositor satisfies these rules, which vary by the institution. Otherwise, rewards checking functions like regular checking, including that FDIC and that NCUA insurance. Now, certificates of deposit is a savings account with a fixed duration such as 3, 6, 9, and 12 months or multiple years up to 10. In exchange for locking in their money for that period of time, depositors generally get a high rate of interest than they would with a regular savings account. However, if they withdraw their money as part of it earlier, they pay a penalty, usually in the form of lost interest. Now, CDs are something that as a kid you probably got spun up or were told about CD rotation. And that's one of the things that I used to do when I was younger. So I used to go in there and buy a few 12-month CDs every 3 months. Eventually it would mature, and then I would rotate that money back into another CD. Some CDs, known as liquid CDs, do not penalize depositors for early withdrawals but pay a lower rate of interest. CDs are FDIC and NCUA insured but typically offer no provisions to write checks, withdraw funds from or a debit card, or add to the balances after they're purchased. So, coming to the conclusion, right? While some MMAs offer attractive rates, most will not be able to compete with other high-yielding alternatives. Banks and credit unions may offer many types of accounts, some with features that can make them competitive with or superior to money market accounts. And although the Federal Reserve amended withdrawal restrictions, banks may still limit the amount of times the depositor can take money out of their MMA. So here's your TWR conclusion, right? With everything going on in the financial sector because of those recent fails in SVB, Signature, and First Republic, as well as some of those foreign banks like Credit Suisse and Deutsche Bank, the wealthy, these guys are running to the hills in search of finding a home for their money. The idea of going cash doesn't mean the same as it did back in the day. And as the world revolves around fintech, the wealthy are attempting to preserve their fortunes with as much minimal risk as possible. While we, normal retail investors, probably don't have the wealth yet to really worry about this as much as the actual quote-unquote wealthy, we must always prepare our estate and preserve capital just like any other person. During times of uncertainty, looming recession, financial institutions instability, volatility in the investment markets, etc., it may benefit us to shift monetary assets around and essentially make money work where it works best. That's all I got for you guys. Join TWR and let's go to war together. I'll see you when that market bell opens come Monday. Ding, ding. The market is our war zone and stocks are the battle. Join TWR and let's go to war. Make the market bend the knee in 2023. Join Traders War Room and bow to no one. Let's go to war.